Good morning. Is cash flow killing your business? That is the topic for today. So there is a very well-known quote that says, turnover is vanity, profit is sanity, cash is king. To me, that is a very, very true statement. You need to know what your turnover is. You need to know what your level of sales are. Of course you do, right? It's a valuable, it's a valuable figure that you need to know. And when I talk about you knowing your numbers, that is one of the numbers that you must know. But of course, you must also know what your profit level is, because ultimately, if your business isn't running at a profit, ultimately you're potentially going to be at risk of insolvency. So again, profit is absolutely crucial. We all know that when you first start a business, generally within the first 3 years, for example, you may well be running at a loss, if not at least at a break-even point. If you're making a profit, even better, right? But ultimately, cash is the lifeblood of a business. And if you don't have cash to be able to pay your bills, that's when you have fundamental problems. And at the moment, with the current economic climate, cash flow is one of the things that I would say I'm seeing more and more that businesses are struggling with. And this is also something that I have struggled with as well. So when I had the law firm, I had a real difficulty with cash flow, and people think as a lawyer, okay, you're charging £250 an hour plus VAT, you must be raking it in. What people don't realise is how much it actually cost to, one, run the business in the first place, but also I'm not doing work 8 hours a day, 5 days a week at £250 an hour. For example, when I did conveyancing work, in that type of work, I would potentially charge an average fee of, say, 750 plus VAT. But when I actually sat and looked at the amount of time that was spent on it, it was easily 2 or 3 grand's worth of work, right? So it's not quite as straightforward of you should be raking it in. But also, I know when I look back at my time in running the law firm, that there were a number of things that I know from those experiences now that, one, if I'd known what I know now, I would do things very differently. I mean, there are certain things that you can do to improve your cash flow. One of them, and this may be something that you think, well, how is that linked? But trust me, it is one of them is making sure that you're only working with your ideal client. I talk about the ideal client a lot, and I'm doing a lot of work with a lot of my clients at the moment on this particular piece, because I am seeing it time and time again where fundamentally businesses are having challenges because they're not working with their ideal client. Whether it's a case of they're not enjoying doing the work, whether it's the fact that they're having difficulties in terms of the personality of the client that they're working with. And more importantly, and one of the biggest things, is cash, because they're not being paid on time. They're not getting clear instructions, and ultimately it's making the relationship very, very difficult. So if you nail your ideal client, one, if they are your ideal client, they will value what service or product you provide. And because they value it, they will not begrudge what they pay, and therefore they will pay willingly. And it then reduces the risk. Now, in business, challenges arise. We all know that. And even your ideal client could have a bit of a blip in relation to their cash flow. Unfortunately, that can happen. But if you nail your ideal client and you are only working with your ideal client, that risk is massively reduced, right? And that, to me, is an absolute fundamental. Get your ideal client, you will enjoy what you're doing far more, because you'll be working with the type of people you want to be working with, and cash will be flowing. Then there's the more direct aspects in terms of improving your cash flow. So first of all, are you using a proper accounts software like Xero, QuickBooks, Sage, Free Agent? There's a number of them. I highly recommend Xero to my clients, because in Xero, for example, you can, by having the correct software, you'll be able to keep an eye on your numbers. You'll be able to have a better idea of when payments are supposed to be going out, because you're looking not only at the bank, but also the general accounts of what you're spending, right? You'll have a detailed understanding of your expenditure. But also within those software, you will have the option to use invoice reminders. And you can set them whatever time frames you want, however many you want, however harsh a wording you want. You can set those invoice reminders. Now, for example, I would always say to clients, wherever possible, a maximum of a payment term of 7 days, right? So actually you should then, you've got a couple of different ways. You can either send a reminder if you haven't received something on the 6th, which is a polite, your invoice needs to be paid by tomorrow, or you can do it on the 8th day to say your invoice was due yesterday, therefore please can you make sure payment is made immediately. And then I would always say a kind of on the 14th day, the 21st day, the 28th day, right? And as each time you're sending those reminders become a little bit more firmer in terms of the chase ups. But because those are then happening automatically, it's a way of you being able to chase up those invoices without you manually having to do it and having to find the time to do it, or your finance manager is having to do it, or your bookkeeper, or whoever does that part of it. Now, nothing beats actually picking up the phone and trying to speak to somebody. And the one thing I would always say is if you're not getting payment and you don't hear anything from them, before you take any further kind of extreme action like the debt recovery or court proceedings, always pick up the phone to them and see whether you can have a conversation and find out what is actually going on in their business. The thing is at the moment, the court processes are absolutely ridiculous, right? So even if you can get them to agree a payment plan and getting something from them, I'm telling you that is a much better course of action than going down the court route. But by picking up the phone, you can actually open the lines of communication. So in terms of cash flow, having those invoice reminders are key. Making sure you have strict payment terms, whether it's 7 days, 14 days, try and avoid 30-day payment terms, because that completely strangles a cash flow in your business. The other thing I would also say that helps with cash flow is have, in terms of invoice points. So a lot of businesses will invoice, say, at the end of every month, and that's their one and only time they invoice. Some businesses invoice as and when the work is done. That's absolutely fine. But if you are invoicing at the end of every month, for example, my advice would be have 2 invoice points. So whether it's on the 14th day and then the 28th day of the month, because it then means if you've got 7-day payment terms, you are consistently through the month getting cash, rather than being in a situation that you're waiting at the end of the month. Because if you get to the end of the month, you invoice, and then half of your clients haven't paid you, you're really in a difficult situation. Whereas if you spread it out, generally speaking, business payments are spread out through the course of the month rather than in one batch. Obviously, often big payments like wages, if you're doing a monthly wage bill, that's usually at the end of the month, usually something like the last working day. And it might also be a case of at that particular point, rent is due, which are usually your 2 biggest outlays in relation to your business. So if you can then spread the other expenses out during the course of the month, then do so. Another key tip I would give is look in terms of the bank that you're using. So for example, Starling I think is fantastic because what it does is on the app, the day before a payment is due to go out, it will give you a notification to say this payment is due tomorrow, please make sure there's sufficient funds, right? By having that reminder, it means that you can make sure those funds are there ready. Also with Starling, it has this amazing feature called Spaces, where you can actually put money aside. It's still within the one bank account, so you don't have to have multiple bank accounts, but it's set aside. So even if you have a payment out, it won't touch the money that's in that Spaces section. And within that Spaces section, you can move money over. So for example, if you know your expenses in the month are X, you can make sure that, you know, when you receive certain money, you can put that money aside in readiness so that you can then drip feed that account. That then is another way of managing the money, particularly if you're a small business and money is tight at this moment in time. Now, obviously that takes more admin to do, to be moving the money around. You've got to remember to move the money back when the bills are due. But all I'm saying to you is there are these little ways that can help you juggle the money to ensure that your bills are covered, etc., and that when money comes in, because often what happens, and I've had it before, I'd have a lump of money come in which I had in my head had allocated against certain bills, and then something completely unexpected comes out of the bank, and you're like, it's actually, I now can't pay the bill I'd intended to pay. Now, if you're managing your money and your financials and your numbers properly, you shouldn't have anything that's unexpected. You know, you should know what comes out of your bank account when, and there shouldn't be any unexpected bills. Obviously, the larger that you get, it's not necessarily you that is in control of that money. So you're not necessarily always then going to know everything that's coming in and out. But as a business owner, you ideally should be knowing what's going on in terms of the financials. If you've got a finance manager or a bookkeeper who manages all of that for you, make sure that you have weekly discussions with them so you know what is going on. They're giving you reports, they're giving you management reports, for example. That way then you are keeping on top of what is going on with your money. One of the biggest mistakes that I see with businesses is they have no clue what's going on in their financials. They might have an idea of what's going in and out of the bank, but that doesn't actually always mean anything, because there could be, for example, suppliers that are owed, and because they've not kept on with their accounts, they're not then aware of when money is coming out. You know, they're not necessarily fully aware of when money should be coming in. And by having a proper account software where it is kept up to date, you'll always know what your financial position is. Decent software will also link to your bank feed, so effectively you can see the balance of your bank on your accounts in comparison to what your accounts balance is showing, and you can keep track of what is going on and what the true position is financially. So I'm hoping that those tips give you some real sort of things that you can implement in your business. If you would like some more guidance, whether it's in relation to your cash flow or any other challenges that you may be facing at the moment in your business, then please do book in your business review. Please just put in the comments business review or send me a DM and we can get you booked in. So thank you very much for listening. I hope you have got some real benefit from today, and I will see you again very soon.